It is totally inevitable that DeFi will reach millions and billions of people. That is inevitably going to happen. I think the biggest question is who stands to benefit the most from this? Like, is it going to be the core people who've defined DeFi over the last few years, who've done the hard work of experimenting with different smart contract primitives, who've proven those, who weathered hacks and other kinds of crazy market events? Or is it the biggest financial institutions who have distribution, who have users and customer relationships, who just take this infrastructure, put it where it accrues value to them, and leaves the rest of us in the dust? I think that's the biggest question. It boils down to value capture. But value creation is inevitable. And I think no matter what happens, that's a huge, huge win for the category.
Nothing said on the Edge podcast is a recommendation to buy or sell tokens or securities. This content is for educational and entertainment purposes only. Nothing shared here is financial advice.
Welcome to the Edge podcast. I'm DeFi Dad here with Nomadic. Today's show features the co-founder and CEO of Veda, Sun Raghupathi. Sun, thanks for joining us. How are you doing?
I'm doing great. Thanks for having me. Always a pleasure to catch up with you guys.
So we are recording this as the rollout of this new Kraken Earn product is happening. There is a vault product powered by Veda that will ultimately allow us as Kraken users to earn on-chain yields. This is something we've talked about on the podcast with Sun and other guests before. We've covered a lot of the Coinbase-related DeFi mullet products. It's a big milestone, and it's a great way to kick off 2026. We'll dig into what this product looks like and how it works, but I want to get more of Sun's insights on the state of DeFi, where we're headed in terms of like who's interacting with DeFi protocols. Is it the average retail user, or is it these B2B type integrations through, an exchange like Kraken? But Sun, why don't we start there? Talk to us about what you have been seeing on your side as a builder at the protocol level in terms of DeFi.
Yeah, DeFi is in a really interesting place right now because simultaneously is it seeing the most adoption that it's ever seen by all the metrics that matter. But also it feels like there's kind of like low sentiment and token prices haven't been doing really well. There's a lot of projects that have been capitulating and pivoting. So DeFi is in a bit of a identity crisis. And where I think things are inevitably going is that this is now the enterprise era for DeFi, where if your strategy doesn't involve selling to the largest businesses, financial businesses on the planet, you're very likely not going to succeed, right? And even if your strategy is to sell to those players, not everyone will win. So it's a bit of a bittersweet situation. I personally think it's the best time ever to be building in DeFi because we have the opportunity now to build products that actually touch millions of normal people, right? If you asked me, I joined DeFi 4 years ago, and 4 years ago, DeFi was nowhere close ready for my friends and family to use it. Like if they asked me, what do you do? How do I use your product? I'd say, don't bother, right? It's not there yet. Spare yourself. Today, we sit in a totally different world, right? So the likes of Coinbase, Kraken, moving on-chain and offering access to DeFi directly within their app experience, I think is the transformative thing now. And there is opportunities. I have tons of friends and family who are on Kraken, who are on Coinbase, and they can now use DeFi. So I think it's a huge moment. It's bittersweet because there's pros and cons, but I'm personally really excited about where we're headed.
Accountable is the new standard for real-time financial verification. In crypto, financial health still runs on screenshots, lagging audits, and blind trust. But Accountable changes that. Powered by the Data Verification Network, it proves assets and liabilities privately across wallets, exchanges, custodians, and banks. Accountable already secures over $2 billion in verified assets across 115 chains and over 90 data sources. To learn more, go to accountable.capital. Grow wealth exponentially. With Toros leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With Toros, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. Toros reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. Toros Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. Neutral is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. Neutral is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi.
So we've got distribution opening up. We've got usability finally happening for us with UI UX leaps forward. Essentially, I'm curious then, when you're looking out at like the next 6 months, what are the headwinds that we're facing now? What is the adversity now for DeFi?
So it is like the train has left the station. It is totally inevitable that DeFi will reach millions and billions of people. That is inevitably going to happen. I think the biggest question is who stands to benefit the most from this? Like, is it going to be the core people who've defined DeFi over the last few years, who've done the hard work of experimenting with different smart contract primitives, who've proven those, who've weathered hacks and other kinds of crazy market events? Or is it the biggest financial institutions who have distribution, who have users and customer relationships, who just take this infrastructure, put it where it accrues value to them, and leaves the rest of us in the dust? I think that's the biggest question. It boils down to value capture. But value creation is inevitable. And I think no matter what happens, that's a huge, huge win for the category.
Yeah, I think that you're framing up these like two different scenarios that I've been considering, which is one is that the foundational DeFi protocols do actually capture value, but again, they're being used as a toolbox by those with the most distribution. That could be a fintech, someone who is more crypto native like Robinhood. It could ultimately be a bank, but they start to use DeFi and basically use those tools to improve their business. And then value will definitely accrue to those businesses, but there will be a value that accrues to the underlying protocol. There's another future, though, too, where they start to reconstruct these protocols themselves. I am thinking more and more that is less likely. I think it's going to be very difficult and high risk for someone like, let's say, a Robinhood who's chosen ultimately to build an Ethereum L2. They're going about it the way that I think it should play out versus trying to, build their own L1. I think going that path is going to be less and less appealing. It's high risk. It requires a lot of resources. It sort of defeats the purpose of creating this like uncensorable layer. It's kind of hard to do that if you're a business with, a board that you have to answer to. And so, yeah, I think that this stands to reason then that we will see the next major fintech plugging into something like Veda, which again, we got to talk more about this Kraken product. I think this is one of the best examples following on the heels of the DeFi mullet products we've covered with Coinbase this year, and then Robinhood launching its own Ethereum L2 with, I think, 1,000 plus tokenized stocks trading. Like, those are wild developments.
Yeah, there's a lot to unpack there. I think just to touch on your first point of, will these businesses buy and partner, or will they build themselves? And I don't think it's necessarily obvious, right? I think it's not going to be a one-size-fits-all answer to this. So I'll give you an example. Take Stripe with Tempo, right? Tempo is obviously Stripe's, a Stripe-affiliated chain that's built for payments and other use cases with stable coins. Tempo has a native DEX on the chain, right? I don't know what kind of architectural details there are about this, but I would imagine this is something that they've internalized and white labeled, potentially built from scratch, potentially taken from the best of open source. In contrast, right, you do look at what's playing out with DeFi mullet products, like what Coinbase has done, like what we're doing with Kraken. And so I think vaults are one of those categories that it never makes sense to build yourself. I don't think that applies to every other, open primitive that exists in DeFi. So just maybe a little bit of a slight caveat to that. But I think directionally, you're right. These are immensely risky products to try to underwrite yourself. They take huge amounts of expertise. And the downside of messing this up is like, it's not a bad product experience. It's that your users have lost all their funds, right? You've destroyed your credibility as a business. So I'm directionally with you. I just think it's not obvious that they want to take some of the stuff that's out there in open source. And then I guess to the second point, the concrete traction and commitment that we see from the largest enterprises, like the Robinhoods and the Stripes and the Coinbases of the world, it is just unbelievable, right? Like all of this happened within like 12 months. And it came out of nowhere, seemingly. So I think this trend is only going to increase. Like we're not seeing this slow down. All of the top fintechs in the world, all of the top exchanges in the world are going to be doing this, whether it's building their own stablecoin, building their own L2, integrating DeFi yield products directly into their app experience. But that's not the end of it, right? Because then we're going to start to see TradFi, like proper TradFi do this, meaning banks, asset managers, traditional custodians. So it's really amazing, and I think it's just the beginning of this trend.
You touched on something earlier, these TradFi players aren't going to come in and rebuild a vault because, like, it's in the name. Like, what is a vault? It's literally security. So if you have a product that has billions in it, like a vault product, and it's got lindiness, it's been safe to use, you've had essentially a living experiment happening for these people to be viewing, and they can go back and like, oh, okay, well, Veda's been around for 2 to 3 years. They've got many billions of dollars. They've never had an incident. So I feel like that in and of itself, that living experience is like so key. And like obviously you're seeing with like Aave, Morpho, I think the players that will be tapped big time for this DeFi mullet stuff essentially. So yeah, I have had a worry that some of these players were going to come in, take the open source software and repackage it for themselves and cut everybody out. But I think for, the DeFi protocols that have sort of set themselves apart, I think they will be used, and I think they'll be used heavily. So super exciting. One thing I want to ask you about while we have you here, Sun, is, we're still somewhat early in the year. I kind of want to know what you see happening for 2026. Like if you were to look out and, hey, what kind of new milestones in DeFi do you think we might hit?
So it'll all bring you back to this concept of, enterprise DeFi. And when I say enterprise, that covers, fintechs, it covers crypto exchanges. It also covers banks and like large traditional slow moving institutions. I think what we will see between Q1 and Q2 are a number of large fintechs announce stablecoins, announce their own L2s, and certainly offering yield products directly into their apps. So that one is guaranteed. It's a no-brainer. They tend to move slow, but fintechs, like all large financial institutions, move slow, but fintechs tend to move a little quicker. So that's going to happen, within the first half of the year. But what I also think is happening a lot quicker than I initially expected is even slow traditional institutions like large banks will start to look at DeFi and offer DeFi products and even consider vaults as ways of activating yield for their customers. And I think that this is purely a result of competitive pressures. In fact, what's happening now, there's obviously a ton of debate about this market structure bill, right? And, there's back and forth. Coinbase obviously has been fighting the good fight. And one of the key issues really boils down to yield, right? And yield and vaults are super related. But the question is, should stablecoin issuers be able to pay yield? And obviously it's in the bank's interest to say, no, they shouldn't, because it totally threatens their business model, right? That net interest margin that banks use to subsidize all of their activities. They are super worried that there's going to be a flight of capital to the tune of trillions of dollars out of these legacy systems and into crypto infrastructure. And I think it's a totally fair concern, right? And like my opinion is, the theme of DeFi over the last 18 months has been compromise. Right? Like we started with our core principles. Everything should be trustless. Everything should be fully decentralized and autonomous, open source. We have shifted from that, right? Now I think the core builders in DeFi, at least the successful ones over the last 18 months, have been a little less, let's say like, pie in the sky principled and more how do we build products that people actually use? And that involves maybe centralizing certain components, right? It involves maybe not open sourcing all parts of your stack. But I think that's the same kind of thing here, right? So like meeting the financial system where it's at. But banks are going to do this because their business models are being threatened. They need to find new ways of monetizing their capital base. And DeFi yield is a phenomenal way of doing that.
Sun, where do vaults figure into this? We all agree that stable coins are the ultimate product market fit for DeFi. It's like one of the killer products. We're all in agreement around these DeFi mullet style products. I think vaults seem like the next most obvious trend to play a part of all of this. Actually, maybe we should talk even more specifically about what do institutions want or need in a vault? Like how do you solve problems for those types of major capital allocators in order to give them the confidence to actually come on chain?
Yeah, it's a great question. So DeFi will win. I think that is like super well understood. But why vaults? Like, why are vaults interesting? So let's bring it back to what you were talking about, which is DeFi as a primitive layer. Like, what is DeFi at its core level? It's a set of primitives, financial primitives, that allow peer-to-peer coordination of different activities, right? So like lending matches lenders with borrowers. DEX protocols let you trade and provide liquidity. So you have this like base layer of DeFi that's all these different peer-to-peer coordination mechanisms. The problem is that that base layer is not suitable for institutions or for consumers. Why isn't it suitable? It's not user-friendly. That's one thing. Like, these protocols are immensely complicated. And if you put this thing in front of a user, they would just walk away. They're not going to bother to figure it out. And the second reason is, from an institutional perspective, institutions need compliance. They need risk controls. They need ways of packaging up the risk return profiles that their customers expect. So what this necessitates is a layer above primitive DeFi, right? You can call this an aggregation layer. You can call it a vault layer. But it's a layer that packages up these different core primitives into products that are user-friendly, consumable, and importantly to institutions that have risk controls and have their own compliance that give them the ability to package things up how they need to. So that's why vaults are necessary. You need a layer that packages up DeFi and exports it to the world. That's what our mission is to do, actually. Like, I think that vaults will become the default way that every single person uses DeFi. And these core primitives will exist at a base layer. They will capture value because there's network effects there, but they're not going to be the thing that is facing actual users. They're in the background as infrastructure.
One other thing just on vaults, I'm curious, when these institutions are coming, what are their competitors offering? How are you differentiating? What is the competitive landscape for vault providers out there right now? How much choice do these people have? And what does that like criteria look like, do you think?
Vaults have very quietly become this may even be the case, the largest number of projects in DeFi in this category. Like, everyone is doing a vault. I mean, you guys see it, right? You probably have, like partners and relationships with people who started as something and now they're doing vaults. It really feels like if you can't figure out what you're doing, you should probably try doing vaults. And so there's a large number of vault products that are flooding the market, but not all vaults are created equally. And I think this is actually one of the biggest issues with the category. You have a bunch of different offerings that are all flying out of the same banner of we're DeFi vaults. Meanwhile, they have totally different risk profiles. They have totally different smart contract implementations, different trust assumptions. And so what we've seen historically is products like Stream Finance. If you guys remember that big kind of like insolvency that happened a couple months ago, they claim to be a vault that is on par with, many of the other vaults, whether it's a lending vault or a staking vault or whatever. So I think you have a bunch of people trying to compete, which is very natural. It's a huge market. It's a great business. But where people can differentiate and where we differentiate is that, again, these products are the most financially sensitive products that exist. When you have a fintech that takes this thing and puts it in front of their users, they're putting their own name on the line there, right? They're taking risk with their users. And so what that means is they're only going to work with the most credible, the most battle-tested, the most trusted partners that exist. And Veda's been the longest running and largest general purpose vault company in existence, in history. We've just been obsessed with it for so long. And there was no guarantee that vaults would ever become interesting, but we stuck through it and now they are interesting. So that's one of our main value props. It's that we've been operating at $1 billion scale for years now, and you just cannot put a price on that. But beyond that, I also think there's a technical way to differentiate here, which is vaults need to provide access to DeFi, right? That's fundamentally what they do. They package up the best of DeFi, whatever chain you're on, whatever risk return profile you are, whatever protocols you're interested in, the vaults need to access that. And so we pride ourselves on having the widest coverage, right? Like our multi-billion-dollar TVL is across almost all the major EVM chains. We support every major protocol, most of the interesting RWAs, and baking all of that into a single platform securely and accessibly is really hard. So it's a really tough market. It's a huge market, but it's really tough. I think we're pretty well positioned here, but there's going to be new players that come and compete because that's what happens when you have a really valuable category.
I just want to point out something too. So this sort of happened in the stablecoin category. There became this massive spectrum of what is a stablecoin, and on one end you had stuff that just looked like fraud and scam, and then on the other hand you had stuff like more like USDT or USDC. Same thing is happening in the vault category. People are calling themselves a vault, but there's a massive spectrum of what a vault is, and like some of these teams don't even have infrastructure or automation under the hood. It's like, hey, we're calling a multi-sig where one user, few users have control. We're calling that a vault. So there is just a cavernous gap in this category that I'm seeing being built out as well. And just something to be cautious about, because these terms get thrown around. I use them too myself. I'll call anything a vault, right? But not all vaults are created equal. Not all stablecoins are created equal. Just want to throw that out there.
I think before we talk more about these Kraken Earn vaults, we probably should do a highlights reel of what Veda has seen over the years in terms of growth. Maybe take us back to the ether.fi launch days, with ether.fi liquid vaults, because that to me was the breakout moment for Veda. And talk us through again, like where are the highs along the way, and then what have you seen since October 10th?
Absolutely. Yeah, let me start at the beginning, which is the launch of ether.fi liquid, which was also the launch of Veda, the protocol.
The Mantle Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on Mantle's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow Mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. Decibel is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
So just as a bit of background, before Veda, myself and a couple other people who are currently at Veda actually started at a project called Sommelier Finance. And Sommelier was a direct-to-consumer yield aggregator, very similar to Earn, right? Where you come to the platform, you have dozens of DeFi yield opportunities, and you can pick the best one. And the thing that was, among other things, the thing that was really hard about this was trying to attract consumers directly to the platform to use these products. Like, it took us 2 years to grow from 0 to 100 million in TVL. Hand-to-hand combat, right? Every single deposit was a huge win. And that was a really powerful learning experience. But, $100 million is fine, but it's not the best scale that you can get with these kind of products. You really want to see billion-dollar outcomes. Now, we launched with ether.fi with the launch of Veda in March, I believe, of 2024. And within 3 weeks, we grew from 0 to $400 million in TVL with the launch of ether.fi Liquid. And that was an amazing experience and learning experience to see that you get the right product, right? You build it in the right way with the right, the needs of the customer, and you put it in the right distribution channel, and the thing just grows like magic, right? And so that really opened our eyes. We weren't like super committed, like, we're going to be a B2B company until that moment. And we saw that success and we thought this is very clearly the future of how these products need to exist. And so that really defined our business strategy. We thought, okay, we want to partner with the best people, the players like ether.fi. We want to get these products embedded as tightly and as natively as possible. And that's going to give us the best growth. So that's been our strategy. We pride ourselves on working with the category leaders in each category. So since then, we've partnered with different players like Plasma, which is obviously a stablecoin chain. We've partnered with Lido, so we're powering Lido Earn, Lombard, which is a Bitcoin staking project. But most recently, and our focus going forward is really on enterprise, like more like Web 2 style exchanges like Kraken, because that's where the millions of untapped users are. Now, obviously, there's been tons of, I think, volatility in DeFi markets over the last year. There have been, major exploits still. Obviously, token prices have an impact. So Veda's TVL has been fairly volatile. But our goal over the first year and a half of our existence was get to billion-dollar scale as quickly as possible and prove that we're secure and that our infrastructure can handle it. And so our peak TVL was $6 billion. It's crazy, and it lasted like a week, and this was during the height of Plasma's launch, which was, an amazing launch. And since then, it's trended down. We're a little bit under $2 billion in TVL right now. But the goal now is less like, let's maximize TVL, and more, how do we diversify the set of customers and users that are actually building on DeFi with our infrastructure, right? So if you ask me, do I prefer 6 billion in TVL or a partnership with a player like Kraken, I'll take Kraken any day, because Kraken's just the first, right? So this is how I currently think about it. I think that the market is only getting bigger and bigger, and the kinds of users we want to attract and the kinds of customers are the set of thousands of financial institutions that exist out there that need vaults. So we're just getting started. I think it's been a wild ride so far. We're really well positioned. I think we got a little bit lucky, as did like a lot of the people in this category who just stuck to their conviction. But now is really the time to go and compete and win this market that's expanding extremely rapidly.
Let's stay on this track and talk more about this B2B, strategy going after enterprises. So let's get into the Kraken announcement here. Maybe break down what it is, what users will be able to do now on Kraken, powered by Veda. Kraken is one of my kind of home base exchanges. So it's one of the few that actually works well in Canada, where I'm from. So I'm personally actually pretty excited about this. As you probably noticed before we hopped on the call, I was pretty jazzed up.
Yeah, it's awesome. So you have millions of users in Kraken. Kraken's user base is actually more prosumer. A lot of them are, not mom and pop kind of like unsophisticated. They know crypto, they're trading, but many of them probably have never touched DeFi because it's a total alien world, right? To go from buying ETH and Bitcoin to like, playing with DeFi protocols, most people don't make that leap. So you're a user of Kraken, you're on the exchange with this partnership called Kraken DeFi Earn. You hit a single button, maybe it's one or two buttons, and now you are earning yield on Inc. and on Ethereum, so multi-chain, and across multiple protocols, multiple lending protocols like Pendle, all simultaneously with a single button click. And that's powered by Veda's infrastructure. Not only do you get that level of performance and flexibility, but Kraken is actually going to market with 3 different vault products, all built with Veda's infrastructure for different risk-return profiles. So there's a low yield, kind of lower risk product, super liquid. That's if your use case is I'm trading every day and I just want to park my capital when I'm not trading. All the way to like lower liquidity products that may take 24 hours in some cases, but higher yield. So I think that is a really interesting design choice. But the goal and the trend I think that we're going to continue to see play out is institutions want flexibility and they want to be able to offer diverse products to their users. So Kraken going to market day one, rolling out to their millions of customers with multi-chain, multi-protocol yield, and different risk-return profiles is, I think, super impressive and indicative of what's going to happen to the industry.
Okay, we've got a number of questions here that we should run through. This is thinking through how we would use this product as a Kraken customer. So first off, what assets will be supported? Walk us through that. If I'm not sure if it's an extensive list or if it's short to start off, but yeah, what assets can we deposit?
Yeah, day one, it's going to be USDC. So starting out very simple, and that's one of the assets that there's the most liquidity on platform, and presumably that was part of the calculus, but you have USDC on exchange, you hit a button, and now you can earn DeFi yield on it.
Do you have any idea what the estimated yield on that USDC will be to start?
It's going to vary. It's hard for me to say. I can say anywhere from 3 to 10% is within reason.
Is there any lockup on these vaults? Are we expected to be able to nearly instantly withdraw? Is there any incentive to lock up, like higher yield for longer lockup?
This is the great thing about this product go-to-market. There's 3 vaults that are rolling out. 2 of them have near continuous instant withdrawals, and that comes at a little bit of a cost to yield. And then there's one product called the Advanced Vault, which does have up to a 24-hour withdrawal period. And so there's this kind of direct trade-off. If you're a user who is just idly parking your capital, you don't need to access it like on a daily basis, then maybe you want to choose a higher yield option. If you're a user who's trading all the time, but you want to capture some value when your funds are idle, then some of the lower risk, higher liquidity options might be for you.
How does Kraken present this information? Do we get a sense of where the vaults are deploying our USDC? And is there any sort of like real-time verification? We did a podcast with Accountable, and we've been covering what Accountable's doing. So it's very top of mind. This is the kind of product that we thought, eventually would not only grow more by integrating like a real-time verification. So anyways, just point being, is there any insight into where our money goes once it's on chain?
So this is the beauty of DeFi, right? First of all, regardless of what Kraken or anyone else shows you, that capital is fully on chain. And so you can go to even third-party free-to-use apps like a DBank or an Etherscan even, and see where your assets are at all times. So that's one thing that's really critical and why DeFi is just as good as it is. But of course, Kraken directly, natively in their app experience has all kinds of data for users to see, like where's the capital, what's the historical performance, what's the liquidity profile, like how much liquidity can actually be withdrawn across the whole vault. So yeah, it's there, but it doesn't need to be. Users can actually verify if they wanted to independently.
One thing I'm curious, as a likely potential user here, what other assets will be available outside of USDC? I don't know if you can tell us, or if there is any other assets coming. And then one other question I want to throw at you too. So with Coinbase, you have the ability to borrow from some of your assets like Bitcoin and ETH. Is that something that might come with Kraken as well, do you think?
So I can answer speculatively. I have no concrete knowledge of these things, but what I can say is it makes sense to start with a stablecoin savings account because that's very obviously the highest demand product. And this is for the record, what I think every fintech will start with, right? You have dollars, you convert those to stablecoins, you deploy them into DeFi, boom, everyone's earning yield. But on the other hand, this is the beauty of crypto as well, right? You have all these diverse assets that can interact composably on chain. You can imagine products on assets like ETH and Bitcoin. So I expect that Kraken and potentially other fintechs will eventually diversify to other assets. Now, to answer the borrowing question, yield is one killer product, and I actually think crypto-backed loans is another killer product. Like everyone wants this, right? You have Bitcoin, but you still want to be able to spend. You should be able to borrow against it. Again, I have no concrete information, but what I can say is Kraken, through their Chain Inc., has a lending protocol called Tidro, which is basically a white-labeled instance of Aave, and you can see what they're doing there, right? There's clearly a long-term strategy. So I wouldn't be shocked if we see some interesting products that come built around that specific partnership and integration.
That's huge. That's what we want. I've been using the Morpho lending product from time to time through Coinbase. I love it, but I do lose something there versus holding some sort of yield-bearing form of USDC on chain that I can borrow against. So this is where we believe the future's headed. All of the best opportunities on chain will, I think, eventually be curated and made available to folks through the likes of Kraken and like other major fintechs. It's just a matter of introducing it and doing it in the right way with the right infrastructure like Veda under the hood. Another question top of mind for me, this would be a great problem for Kraken to have. Are there any deposit caps to preserve better yields for those in this new USDC vault?
As far as I'm aware, there's no caps on day one.
Is there any contingency plan for what happens if one of the vaults is exposed to a protocol that gets exploited? Like, God forbid that happens. I feel like that's a part of the reason that they're working with you all. And I'm imagining you're working with, the most blue chip protocols, the most battle tested protocols. But yeah, what if the worst case happens?
So one thing I'll say is that I haven't mentioned, these vaults are actually curated by two different curators. One is Chaos Labs, who many people probably know as the risk managers of the Aave protocol, which is, tens of billions of dollars. And Centaura, which they've grown a lot recently, and in my opinion, are one of the more sophisticated curators. So this is why DeFi needs curation, right? That's exactly the question that you're talking about, where, when a user puts their funds into a DeFi protocol, if they're not actively monitoring and seeing what the situation is and evaluating the market, then they're at risk, right? And they don't really have a way of responding to that. So this is where curation comes in. These are two of the best curators that exist in the market. They have experience managing billions and billions of dollars on chain. And so the curator's job is to make sure that the vaults are earning good yields, but that they're also safe.
Puffer is building the ultimate vertical in crypto. Your crypto deserves better yields. Better yields require better infrastructure, and Puffer is building it. Puffer Liquid Staking delivers above-market ETH yields, secured with up to $5 billion in slashing penalty protection and buffer. Puffer Institutional offers compliant, secure, above-market ETH yields for DATs, institutions, and large players. Puffer Unify is the first synchronously composable rollup, enabling the next generation of app chains on Ethereum with sub-10 millisecond transactions. Unify AVS enables pre-confirmations, making Ethereum validators more profitable and rollups more scalable. Puffer is premier infrastructure and yield for digital assets. Stake your ETH at app.puffer.fi. Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's Syrup USDC and Syrup USDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance.
Hey, let's stay on curators for a second here. Unless there's anything more about the Kraken stuff that you wanna talk about, Sun.
No, let's keep rolling. Let's get into it.
Cool. So something that DeFi Dad and I have been talking a bit about is just this idea of AI curators, or maybe it's just like even more automated curators. I'm curious where you stand on this, if this is like an actual real future or how much we still need humans in the loop kind of managing a lot of this day-to-day stuff.
Yeah, this is a great question. And just for what it's worth, before I joined DeFi, my background was actually in AI. I was a PhD student in machine learning. I left just when things were getting hot around like the GPT, just before GPT-3. So definitely had some FOMO, but I think a lot about the intersection of AI and crypto. In this particular case, I think it is absolutely going to happen, potentially in the near future, definitely in the medium term. In the short term, I wouldn't trust my money with an AI agent as of today, right? Like DeFi, forget the traditional markets, right? DeFi is a dark forest, and it is just a ground for actors who want to hurt you, right? Like that's really fundamentally what DeFi is at its worst. And so when you have AI agents that maybe don't account for all the edge cases that exist, that don't have like hard guarantees and constraints on what they can do, I think that's a recipe for disaster. But long term, very clearly, right? Like intelligence is increasingly becoming commoditized. And the beauty of DeFi is that all of this data is public. You can transact permissionlessly. So DeFi is actually the first place where I think we'll see fully autonomous agents be able to manage capital on behalf of users at scale. And I actually think this is part of our goal at Veda, right? Because if you think about how you actually build these systems, you don't start with the AI agents and then ask the users to give you their money, right? Because nobody's going to do that. And we've seen people try to do that again and again. You start with the capital base. So you build trust. You build a network of users and capital and assets. And you progressively roll out these systems as they get better and better. And maybe at one point, there's more AI automation than there is human in the loop, right? But that's really how you build a network of agents that are managing capital. And it's absolutely part of the long-term vision at Veda.
Is AI already a part of any of the Veda vaults? Like, do you use it to identify where to rotate capital next, or do you use it for any sort of threat detection? This is all like way beyond my expertise, so maybe these are silly questions to consider right now.
No, they're great questions. And in the making of a Veda vault, there's absolutely AI involved. Now, our focus is mostly on the infrastructure, right? Making sure the smart contracts are secure, making sure we can access as many DeFi protocols as possible, analytics on vaults. But in the risk management process that curators use and that, third-party providers like Hexagate that we lean on, they are absolutely using AI across many different verticals, right? So Hexagate and Hypernative, I'm not sure if you guys are familiar with those projects, but they have this active monitoring system that looks at every transaction on the blockchain and classifies whether it's going to be malicious or not. And in many cases, those AI systems can detect before a malicious transaction has even hit a contract that it's coming, right? They might see a suspicious contract is deployed and it's pointing at your address. So there's a ton of value from AI there. I'm absolutely certain that they're using state-of-the-art models as part of that process. And then you look at the risk managers like Chaos and Centaura. Many of them are classically trained in AI, if you just look at their backgrounds, and they all are leaning very heavily into it. So I'm very sure that there's large amounts of AI that are going into these products. From our perspective, we don't have agents that are like running on these vaults and managing capital, doing things like that yet. But who knows? The space is moving really quickly.
So, Sun, just a couple more questions here for you. One thing that I want to, we might have asked this at the top, but I kind of want to double back to this. So when institutions, businesses are coming to you, what is it to them that's most important when you're having these early conversations? Is it the allure of high yield? Is it risk adjusted yield? Is it security? What's top of mind when they're coming through the door?
Yeah, this is a great question. And the answer is maybe not obvious. It's something that we've learned over time. The first thing they care about is obvious, and it's safety, right? That is the number one thing. All of these customers that are interesting have something to lose. And so they're not going to take unnecessary risk, even if it gets them a couple extra basis points, right? Like preserving their reputation, preserving their user base is the number one priority. But number two is actually flexibility and modularity, right? They want the ability to customize these products in the way that makes sense for their use cases. And what does customize mean? It means being able to access different markets, different assets, different DeFi protocols, different chains, right? Maybe they're launching their own chain and they want to launch on Ethereum day one, but eventually have that capital migrate to their chain when it goes live. So all of these things are really important to them. So you want flexibility with the caveat that it needs to be safe. And that is totally our sweet spot, right? Those are the two things that we pride ourselves on.
I think we should cover a bit more on what's happening at the protocol level with Veda. And, a common question that we're all asking with the best DeFi protocols in 2026 is, how are you generating revenue? Talk to us about how the business model of Veda actually works.
Sure. So Veda operates more like a SaaS company than it does a traditional DeFi protocol, in the sense that our pricing, number one, it's how we like to work with partners, right? Like we like to give them things like SLAs and guarantees for what our infrastructure can do. We like to give them predictability into how things are going to be priced and visibility. But I think the biggest question is one issue with DeFi is the lack of dynamic pricing that exists, right? You have these just kind of blanket take rates that happen at the protocol level, and there's zero contextual information there, right? It's just like you use our protocol, you pay X amount. And I think that can work in a mature category, in a mature industry. But with DeFi, it's very dangerous because you risk getting undercut by competitors. You risk getting outbid for important integrations and agreements. So Veda, this is another way that we operate on a case-by-case basis. We like to approach customers with, what do you need from us? What can we build for you? Does it come off the shelf? Does it require extra work? Now, as far as like our explicit revenue model, it typically boils down to a combination of a flat fee, like a platform style, SaaS style fee, and a variable fee that's a function of either TVL or a yield. So I can't give you hard numbers, but that's generally how it works. And the important thing is that our Veda is generating revenue to the tunes of millions of dollars. And this is, I think, I guess a vote of confidence that we've built infrastructure that allows us to monetize even now. I think actually, we are at a point in DeFi where the market is growing so quickly that being overly focused on like capturing value and take rate is actually detrimental, right? There's trillions of dollars moving on chain, and that capital is long-term not fee sensitive, but short-term it might be fee sensitive. So we're very focused on growth and integrations, but we are generating revenue on day one. And that is extremely important to me in running this company, that we are continually testing the market to make sure that we're building something that people are willing to pay for.
Sun, what does headcount look like at Veda? And is what you're building something that can scale with, I guess, not too many more people, or where are you at today, I guess?
We're a team of 30. And absolutely, when I say SaaS company, it's economics, it's scalability. There will be thousands and tens of thousands of vaults in existence, maybe even hundreds of thousands of vaults. And the way we want to scale is not like a consulting company that scales linearly with headcount, but where you can have a small team that can have a massive impact by building a platform and rolling that out to infinitely many customers. So that's our ambition. We are not infinitely scalable today, and this is one of the really interesting technical challenges, right? Because we're piecing together novel smart contracts, backends, front ends, interesting data models, new kinds of cryptographic primitives. Packaging all of that in a scalable way is really hard, but that's our goal, and that's kind of the mandate for our technical roadmap.
I was looking at the website, Veda.tech, and I'm pretty familiar already with most of the major teams you work with. ether.fi we called out. There is Kinetic on Hyper EVM. And then there's Plasma. I totally forgot about the fact that you guys were running like one of the biggest vaults there, if not the biggest vault. But who else are we missing here? Like, I'm seeing the Bybit name flash across the screen and Mantle. Like, I'm just speculating here, but maybe we'll be talking in the future about, Bybit having their own Earn product. Like, this concept of the Earn product to me feels like a watershed moment once other exchanges see this roll out. Coinbase, to their credit, led in a certain way there. We interviewed Robinhood this past year. Absolutely reading between the lines there. It feels like they're going to be offering something like this eventually. We hope that they do. Who else do you work with? Like, who are those top clients for Veda?
Yeah, so you touched on a number of them. ether.fi has been our oldest and, to some extent, our largest user. They have over a dozen Veda vaults, all integrated really tightly in their platform. Veda is the infrastructure provider for CMETH, which is Mantle's restaking product, which is already accessible on Bybit. So technically, you can get ETH yields on Veda through Bybit already. Plasma is a great partner of ours. I think they've had, there's been a lot of narrative churn and volatility with Plasma, but I honestly have never been more bullish on them. And I think there's going to be some interesting products and launches and announcements coming up that we're working together on. But yeah, part of our strategy is, yes, we want to keep getting new customers and, flashier names like Kraken, but really doubling down on our existing partners who we believe in and we've taken a bet on and they've taken a bet on us. I think that's also going to pay dividends.
Sun, will there be a token in 2026 for Veda?
What I can say is there's no concrete plans right now for a token. And just looking at the broader market, tokens don't seem like they're doing that well. at the moment, even tokens that represent very successful businesses. So my focus is really on building a successful business that captures value. I think that how you get liquidity and how you make that value accessible to the public is a really interesting question, and tokens do have a place there, but right now it's not our focus.
I think this is a great place, guys, for us to start to wrap up. So first, I want to remind our listeners they can learn more about Veda by going to their website at veda.tech. They can follow Veda_labs on Twitter. Follow Sun's personal handle. It's Sun, ANDR_. We'll put that into the show notes. Sun, thank you so much for coming on. Congrats on this huge announcement with Kraken. We just learned about this as we were recording the show, so this is all news to us. It should all be live by the time you're listening to the podcast, but yeah, just huge moment for DeFi adoption. And again, I'm sure this is just the start of it with Kraken and other exchanges. But Sun, I want to give you the final word before we go.
Thanks for having me. As always, just a great convo.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.